Hey folks, Dan Frio here with your closing bell for May 29th, 2025. So we do have some breaking news in regards to the tariffs. I'm going to say I told you so in regards to the tariff thing. President Trump isn't going to let a dead horse die. So the judge last night deemed his tariffs illegal. So now it's going to higher courts. What's happening? And that's what we have the breaking news on right now. So let's get over to CNBC to take this away. And then I'm going to show you market reactions, not only stocks, but bonds and interest rates right after this.
We are getting some breaking news out of Washington. Let's get back to Megan Casella at the White House. Megan.
Hey, Mike, some moving trade news here. On that ruling overnight on the Trump administration's tariffs, the U.S. Court of Appeals for the Federal Circuit now saying that all of those tariffs that were found to be unlawful are able to stay in place, at least temporarily, while this case moves through appeals. So essentially, the administration's request for an emergency stay, meaning that the ruling would not yet take effect, that stay has now been temporarily granted while they give both sides more time to respond. Now, the court did set a June 5th deadline for the plaintiffs to then respond and for the administration to then respond again by June 9th. So in the coming weeks, we will see more movement on this. But what this means, Mike, is that in the meantime, it's status quo on the tariffs. Despite that ruling last night from the Court of International Trade, now the administration's request for an emergency stay or for some immediate relief has been granted. Trade negotiations can continue. Tariffs can continue to be collected as we see this case move further into appeals. Mike?
Okay.
So even more confusion to add to the rest of this mix. So let's get over to the headlines that we're seeing right now. So basically everything is on the Trump tariff situation right now, but the Federal Reserve does still play a role in all this, folks. So Federal Chairman Powell, he actually met with Trump today and finally said, okay, what you're doing is political, but what I'm going to do is I have to stay the course with what's good for the nation and the two mandates that the Federal Reserve was created for. One was full employment and two was AKA inflation or high prices and things like that. So that's why the Federal Reserve was created. Okay, so other headline news we got right now is Costco just topped earnings estimates. Sales jumped 8%, but on the Gap side, the Gap right above my head, I don't know if you can see it, they're getting clobbered right now because they're saying tariffs are going to cost them over $100 to $150 million in those costs. So let's get over and see what market reactions did. So we got across the board green in the equity indices. They're up between maybe 0.2 and 0.3, maybe all the way up to 0.4 here. Nothing to really write home about. You got the VIX right above my head. That's the anxiety level on Wall Street. So as that number goes down, basically the blood pressure on Wall Street is going to go down as well. Let's go over and look at crypto. Haven't looked at that in a while. Bitcoin, it's down 1,000. So it was at $107,000 for a Bitcoin. Back in September when we bought this, it was like 60. Check out Stock Talk Tuesday with me when I do that, and I'll explain to you kind of how stock markets work and everything else. Let's go over to oil markets. We don't see this in a long time. I know I'm off chart a lot of times, folks, but I got to get back to the basics. So what we're going to do is look at oil because oil is a big piece of the inflation front. So inflation's still running, in the background, but everything right now is tariff. And I didn't see anything in the news today down through here about that big, beautiful bill. So I'll give you the update on that tomorrow. We go over to the bond market. The bond market, let's get this video out of the equation. Bonds are looking pretty good. We got the MBS market right now up 24 ticks. That means mortgage rates are going to come down. Let's get over to the rates. They're down 0.01 right now. They're going to move a little bit more. They might by the end of today once that gets adjusted. So a nice rally in bonds. Let's look at a 2-day rally. Look at this. And you got to remember, folks, when this chart goes up, rates are coming down. Let's look at a 5-day chart. It's on a roll, folks. So let's don't buck the trends. We're filling nice gaps here. When you look at charts, you want to see when these gaps are filled. Look at the gaps. They keep filling and they keep filling higher and higher and higher. So that's good news. We're going to run this trend. Maybe we can get all the way back to a 3-month high where we were up through here at 100.89. We're about 100 basis points away. So I'll keep track of that to see if we can get back up there. And then once we get there, folks, that means mortgage rates come down even further. Remember, as these prices go up, rates come down, might be your entry point for refinancing. I'll get to that in a minute. So that's what we're seeing in the bond market right through there. So let's get over to what the economic calendar has in store for us tomorrow. Let's recap today, though, just to get some of that information. We had continued jobs come out and initial jobless claims. This is giving us the kind of a feel of the job market. Well, it's not solid, but it's not yet just crashing, because if you look at this, you have a continued jobless claims. Last reading was 1.89 million. It was 1.91. So a little bit elevated, but nothing really to shock the markets. And then initial jobless claims were a little bit higher than expected as well. Last reading was 226. They expected that to go up a little bit to 229. It actually went up to 240. So that's what we're seeing here. Another piece of this puzzle a lot of people miss is right through here. We had a bond auction. And I watch these things because I want to see what yields it's taking to get rid of all this national debt that we have. So if you go across here, the last time we had all this debt out there, it took a rate of 4.123 to get rid of all the debt. Well, that had to be elevated just a little bit to 4.19. Okay, so the rates went up, 0.07? It's not, what you have to understand with this is why we want even these rates to come down is the Federal Reserve is the one that pays the interest on these things. So that's another thing you got to look at. When you start looking at a lot of these bond yields, especially government bond yields, when they get higher and higher and higher, that means the government is paying more and more interest on its debt as well. So that's one of the reasons why I'm hoping the Federal Reserve cuts rates, because at least make our debt interest payments on that a little bit cheaper. But we'll see how time tells on that one. Now, tomorrow, we're getting more pieces of this puzzle. Remember I said at the beginning, Federal Reserve's concern, or the reason why they were created, was two things. One was price stability, aka inflation, and the other one was just keeping jobs at the highest level that they possibly can be. Okay, so we focused a little bit previously on the jobs or the unemployment piece. Now, tomorrow, what we're going to get is the PCE. Okay, the PCE and the GDP. Okay, a lot of acronyms here. The PCE, I'll explain this to you, is the personal consumption expenditure. Okay, this is the number one factor that the Federal Reserve monitors when it comes to inflation. Okay, core means they stripped out food and energy. Why? Well, remember I went back here a little bit ago and said, we focus in on oil a lot of times too, because this is a huge piece of our inflation. So as oil prices go down, it's helping on the inflation front as well. So that's why we focus in on a lot of these things here. But because oil is so volatile, they strip it out to maybe basically smooth things out. So here's what we're seeing the numbers through here. They're expecting the PCE down here, this number, it was 2.3 previously. They're expecting to go to 2.2. Well, here's what I'm thinking. Well, let's go up to the core. The core last month, the last reading was 0. There was no inflation on the core PCE month over month from February or March to April. Okay, so now we're going year to year. Well, if it was 0 and maybe it's going up to 0.1, maybe we're expecting the yearly piece to start dropping even more. So I wouldn't be surprised tomorrow if we got a little bit of a shock in the core PCE being a little bit lower than expected. Just a thought. A lot of these tariffs haven't moved into it yet. So these numbers, even if they might be exciting tomorrow, they're all going to fall flat on their face, because once the tariff trade comes back into play, all this stuff is irrelevant. I hate to say it that way, but that's what we're seeing in tomorrow's market. We're going to get that, and we're going to get I thought the GDP was in here. Is it in there somewhere? Oh, where did we get that? We got I apologize. We got the GDP today. Here's where the GDP went. We had the previous reading. Quarter one was minus 0.2. Last reading was 2.4. They expected it to drop to negative 0.3. It actually dropped all the way down to negative 0.2. So right through there, our GDP Q1 isn't looking too hot. And then in GDP price index, we're going to skip through there. So that gives you kind of the gist of what we're seeing in the financial news over the next 24 hours. So I do have one public service announcement before you have anybody pull your credit for a mortgage or a car loan. Okay, I need you to do this. Okay, so what happens is these are called trigger leads. So if you're out there looking for a car loan or a mortgage and the bank pulls your credit for one of those, what happens is that your financial data is going to get sold. Okay, if you want to stop that, actually the credit agency's created a website you can go to. It's called optoutprescreen.com. So just go scroll to the bottom of this website. You're going to hit here and subscribe. And what that's going to do is when somebody pulls your credit, they're not allowing the financial or the credit agencies to sell that data. You're gonna thank me over the long run, because most clients, when their credit gets pulled, they're not worried about their credit scores going down now. They're worried about getting 30, 40, maybe 50 different solicitation calls. So if you want to stop your financial news or data from being sold, please check out optoutprescreen.com. So if you need some help navigating a mortgage, I'd love to be able to help you. My name is Dan Frio. I do this report actually 2 times a day to inform you guys on what's going on with real estate and interest rates and mortgage programs. The reason why? I'm actually a federally licensed mortgage loan officer. Yeah, I work at a federal bank, so I'm licensed in all 50 states as well as Puerto Rico. The cool thing about us is we're also a large brokerage. We have 33 other lenders in the background that we can use. Why did we do that? Well, we did it to help you guys. When you're navigating home buying or home refinancing, what are you looking for? Well, you're looking for that lowest rate, lowest fees, but you got to make sure you're working with the right person that has the right products. Okay, so let's say we did that. So now you're like, okay, now I got to apply it, 3, 4, 5 different places to get different quotes? Well, just use our system because we're going to get you quotes from over 33 different lenders or up to 33 different lenders by just going to the rateupdate.com. You'll use me during this whole process, so don't fear any there. So if you want to get started on this, the application link is right above my head. If you want to call or schedule a consultation, you can do that right through there, or give us a call. Our phone number is 844-775-5626. Or if you want to reach me personally, you're like, Dan, okay, I just locked in. Can you review my paperwork? See if you can give me maybe a lower rate. Dan, here's my rate today. Can you help me out? Well, we do have a tool for that down here as well. Or you might even say, I just need some help and I just want to kick the tires. So please, reach out to us. To reach me personally, I'll give you my email address. It is dan@therateupdate.com. Feel free to email me. Make sure you put in your name, your phone number, any other contact information, because don't be surprised. I might just give you a call or a text to make sure we're on the same page when you're looking to buy or refinance. So thanks for watching, folks. I greatly appreciate it. If you could do me one favor I can ask. I'm trying to hit 40,000 subscribers by the end of the year. Only you can help me. So if you wouldn't mind subscribing over there, I'd greatly appreciate it. Have a great day. I'll see you back here tomorrow. Bye-bye.